Hey traders, this is Blake Morrow, and you are listening to the week ahead video for January 8th, 2023. I want to welcome you to this week's video. We're going to talk about, obviously, the big moves that we saw on Friday, following the jobs report, actually following the ISM report. But more importantly, we're going to talk about this next week as we are facing the US CPI data, which is going to be a big piece of data for the markets. It's probably going to be the biggest one for the month. I know you're like, well, the jobs report did yield us a lot of moves, especially with the ISM, but the CPI, that's the big kahuna, and that's the one that we're all going to be watching this week. Now, before I get into that, I need to talk about something really important. It is the beginning of the year, and in the beginning of the year, Forex Analytics, we offer a discounted rate that will go live actually by the time, well, I don't know if it's going to be by the time you watch this or it'll be tomorrow morning, but be on the lookout. We are actually lowering our prices for the next couple of weeks as we do at the beginning of the year. You guys are going to get buy 1 month, get 1 month free of Forex Analytics, or you get a, I believe, 25% discount on the semi-annual, which usually is a 12.5% discount, or on the annual subscription. For those of you that are, you guys wait, I know throughout the course of the year, you wait for this one, it's going to be a 40% discount. So take advantage of it. Again, most of you know, if you've been watching this for a long time, it only happens once, twice a year where you get these discounted amounts. So make sure you discounted rates. So make sure you take advantage of it. Also for those of you that are newer, make sure you guys and gals also download the mobile app, because the mobile app is an important feature of Forex Analytics. There's not very many companies that offer an app on your phone where you can get the push notifications, the analysis right at your fingertips when you're mobile. So make sure you do that. All right, let's talk about last week. First of all, I was traveling on Friday. So I was traveling during the jobs report. If you were in the community, you knew I was not going to be in front of the computer. If anybody from the Southern California group that I met with, if you're watching, thanks for welcoming me to San Diego. The weather was beautiful, as you'd always expect there. But I want to talk a little bit about this movement, because the move was pretty dramatic. Now, for those of you that don't know, we had this massive move in the dollar, and we saw this big reversal following the jobs report. And I know what you're probably thinking. You're thinking, well, that jobs report was, it was strong. Why'd the dollar go down? I think there's a few things that we need to highlight regarding the jobs report that we saw. The first and foremost, the number was better than expected, but the average hourly earnings came down, and that means that the inflation rate may come down if earnings are coming down. One of the things that everybody is really laser focused on is obviously employment and inflation. Employment still is sticky strong. Most people feel like it's going to taper off as we head into the new year. But also because average hourly earnings came down, I think that was one of the things that set the dollar off. But really it was the ISM services data that came out after the NFP that really sank the dollar, just really kind of put a nail in its coffin. Now, I know you're probably wondering, is this move overcooked? We're going to take a look around, and I do want to say that the problem with the price action this week is prior to the data on Friday, and let me go ahead and I'm going to shrink this just a little bit. Let me move this down. Just give me 1 second. Okay. Prior to the move, what you're going to see is in the dollar, it looked like we were breaking higher. We broke above some horizontal resistance. That kind of squeezed out, position-wise, that squeezed out anybody who was short. So the problem with that, with the dollar, is now we got this big reversal. We got an bearish outside day candle in the dollar that doesn't look healthy. And the fact of the matter is, if we take out this horizontal support, you might remember from the last couple of weeks, why is this blue line here? What is the significance of this blue line that is on my dollar index chart? The significance is that was the post-COVID spike highs back here in March of 2020. So when we spiked higher, that was the breakout point. coming down, breaking back below that is going to be really, really bearish. Now, you try to think about what is the catalyst that could drive that dollar lower. Well, it's obviously going to be CPI this week. You know, CPI is going to be the big deal, and that does happen. Just so everybody, you know, has it on the radar, it is Thursday. I thought it was actually Wednesday, but it's actually Thursday of this next week. So because it's on Thursday, we have a couple of days where the dollar might be probing, you know, this you know, key level support, but the catalyst for it to break down is probably going to be after the CPI data. And, you know, if we start to see inflation really soften, and keep in mind, we are seeing inflation pressures soften globally. If they do here in the US, that's going to be a further catalyst that, you know, people are going to sell dollars. At the same time, they're going to end up buying equities because they're going to think that the Fed is getting closer to, you know, finishing raising rates. The terminal rate might be only a quarter point away. I've seen a lot of people reference the fact that that maybe a quarter point rise is not factored in the market. I know what's for sure not factored in my opinion, would be the Fed not doing anything else, not raising rates any further from here. Now, the market's not pricing that, but some of you might have remembered a couple weeks ago, I interviewed Nick Giovanovich, and he thought that the Fed was actually done raising rates. They're finished as of, you know, December. So if you're, you know, not on Trader Summit and watching these videos, you should. It's a free resource for you where all of this is put together by different analysts, you know, around the globe. Anyway, going back to what I was just saying though regarding the dollar, you know, how about if inflation comes in, you know, soft? If it does, that's probably going to put the dollar lower. But more importantly, and this is the point I was trying to get to, is you might actually see a breakout in the S&P. So one of the big catalysts to a move higher in the S&P would be that the market feels that the Fed has finished or is very close to, you know, maybe a quarter point away raising rates. Now, you'll notice that the S&P is broken out of this triangle that we talked about last week. It's at 3,900. If it breaks above 3,900 and we get a daily close above 3,900, which could happen as early as Monday of this next week, we should be challenging the 200-day moving average and quite possibly this very, very critical, in my opinion, very critical horizontal resistance up here around the 4,100 level. Now, there is one trade that is by far my favorite trade in the event that the S&P breaks higher. Some of you may know what I'm about ready to say because you follow along during the daily broadcasts that we do for free. And if you don't know where to find that, first of all, there's a link in the description of this video that gets you to the shows that we do every day. The F.A.C.E show, the Flow show, those are free. And they're not just by me, they're our team. So make sure that you're listening in and accessing this free information that we give you every day. We got a great European show that I'm asleep during, and then also the F.A.C.E show where you're going to catch myself and the rest of the team. All right, some of you may know what my favorite trade would be in the FX market if the S&P starts to break higher. Well, for those of you that do not know, that would be the US dollar Mexican peso. Now, the reason why I'm focusing on the US dollar Mexican peso is twofold. First of all, on Monday, the 9th, guess what is released in Mexico? Their inflation data. So, because they are releasing their inflation data, if that happens to be a little bit stickier, that means, you know, stronger in Mexico, then we might have the reason for a break below the 19 level. And the 19 level is a huge level of support. Most of you know I've been watching that like a hawk. I am overall very bullish the Mexican peso, bearish the dollar. I think that this exchange rate is going to be trading a lot lower over the course of the next year, roughly. Could this be the catalyst that drives it lower? Could be, but one of the other things that I want you to see is because when the S&P breaks higher, this is the S&P in orange, when the S&P breaks higher, you tend to get an inverse move of the US dollar Mexican peso. So if the S&P does break higher above that, remember we talked about 4,000, 4,100 in particular, which is, you know, right here in the S&P, that would probably give the green light for the dollar Mexican peso to break down. But keep in mind, on Monday morning, Mexico is releasing their inflation data. That's going to be important. Thursday's CPI is going to be important, and you should be watching what the S&P is doing to take cues with the U.S. dollar Mexican peso. Again, that's like my favorite setup right at this moment in time. But let's talk about some of the other currency pairs. So I want to just highlight and let's take a look around. Okay, the euro still, in my opinion, has further to go. And you guys know that because we have some bull flag patterns that still, in essence, could still, whoops, let me grab that blue line here. I'm trying to grab it. I keep grabbing the entire chart. The euro, if it really wants to extend its gains up to 110, I think that's entirely possible. We got a bullish outside day candle. We had a very, very big, important hold on Friday with the euro. And, I'm just going to give you the old saying that I give most of you that listen to us on a daily basis, the same talk here. What does not go down usually has only one other direction to go. You look at the euro, and we've had a nice explosive move off the lows over the course of the last few months. The pullback has been very minor. And because the pullback has been very minor, that just tells you that there is really a lot of strength in the euro from a technical perspective. If you look from the lows to the highs of this recent several month move, a 24% retracement, which is the one that you're currently looking at, that's really what's holding. 24% retracement is a very shallow retracement. When you get a very shallow retracement, that means that there's probably some more juice left in the upside. And when you have a bullish outside day candle like you see there in the euro, I don't know if I'd really want to be short. But that's not just a euro story. You look at the sterling. The sterling's back above the 200-day moving average. Also, explosive move off the lows. You can say that the pullback in the sterling, the cable, has been very shallow. Again, back above the 200-day moving average. A bullish outside day, gotta respect it. Dollar yen is reversed, and the dollar yen, we start trading below 130, and that's probably not going to be a very good look. You look at the Aussie dollar. We've been consolidating in the Aussie. We closed above the 200-day moving average. This is the first time we've closed above the 200-day moving average since, you have to go all the way back to June of last year. That's a big development, especially with China reopening. Now, here is one of my favorites, because on Friday, we did have the Canadian employment, not just the U.S. employment. We had Canadian employment as well, right? So you had the Canadian data was extremely strong. We talked about the dollar CAD. If it broke this ascending trend line, well, we closed the week below it. We also pivoted off of 618 retracement, and we couldn't breach above that. So my opinion is, with the dollar CAD, you're probably going to have a situation with where over the course of the next several weeks, you're going to get an AB equals CD type of move, which could take us back below the 200-day moving average, and maybe even below 130. I think this is a bearish event that we closed below this ascending trend line, and I think everybody should keep that in mind as we go forward. Now, one of the things that has to happen at this stage is we have to see that recovery in the stock market. So remember, the stock market is going to be probably the key to all of this working out, and continued dollar weakness is we're going to have to see that S&P continue to stretch its legs higher. And how is that going to happen? Well, that's going to happen with inflation, if inflation continues to slow, which, remember, is on Thursday with the CPI data. Now, before I continue on, and I just want to show you a couple last things, I need to mention this. If you haven't checked out our sponsor today, it is the Trader Funding Program. You want to know how to trade our money and not risk your own money and keep 75% of the returns and be involved in the Forex analytics community at the same time? Well, check out the Trader Funding Program. We are getting people that are passing the assessments. They are starting to trade our money, and they have been for the last several months, and they're getting payouts now. And it's really a beautiful thing to see. And remember, you keep 75% of the returns, and you don't take any of the risk, and you get involved in the Forex analytics community for a period of time, because we want you in our community so you can be in our chat rooms, you can be finding ideas, you can be figuring out exactly what you want to trade. It's a wonderful way to not only be involved in the Forex analytics community, but also, you know, put yourself in a situation where you're using our money, not risking your own money. So check out the Trader Funding Program that is today's sponsor. So back to our scheduled program. All right, so let's talk about one last thing I wanted to talk about is obviously precious metals. Because of the move that we saw in the dollar, that does risk that the gold market breaks higher. Remember last week we talked about the ascending wedge. You might remember this. I actually took this line, I cloned it and put it up here, and I said, you don't know if that wedge is going to break down, because if it doesn't and we extend our gains, then there's a good chance that we're developing some sort of ascending channel, which seems like that's going to be the case at this point. It looks like we might rally towards the 161% extension, which would take us up towards 1900. Now, most people I talk to are very bullish gold. I don't know if gold's going to, you know, make it. I'm skeptical to see how far gold's going to stretch in this move. However, we should note that the 618 retracement of, you know, that the all-time high to the pullback here is going to be right around the 1897 1900 level. That's important to note. But I think that silver, you know, which looked like we were going to reverse, we got down to, well, I thought we were going to actually get down to 2250, I think is where our team was looking at. But obviously with the reversal that we saw in the dollar, the stock market, because of the jobs report, you saw silver actually reverse course. I think the better trade out there between the two is going to be, if you're trading on the long side, is going to be gold, because silver has been showing some signs of weakness. I don't know how far silver is going to go, but you know, some of you are going to be focused on that one a little bit more than others. Anyway, I want to say that next week is going to be probably one of the most important weeks of this month before the Fed meets at the beginning of February. So make sure you keep your head on a swivel. Make sure you are, you know, staying involved in a community like Forex Analytics. Make sure that you're listening to our free shows every single day, and make sure you take advantage of our pricing. It only happens a couple of times a year. If you've been listening here on the week ahead videos for the last 5, 6, 7 years, you know that we don't do this that often. So, and you know, we don't mess around with that. So when the prices are discounted at 40% of the annual subscription, and you've been waiting for it, take advantage of it. This is the month to do it. Anyway, guys and gals, I want to say thank you so much for joining me today. Thanks for spending your very precious weekend time with me. Thumbs up is always appreciated. Make sure you subscribe to the channel so you don't miss these week ahead videos. I just hit my microphone. Have a great remainder of your weekend. I will see you Monday morning on the F.A.C.E show myself. Have a great day. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.